Folks, today we're going to talk about two, not one, but two trending large cap stocks that are setting up for a big, massive move. Let's get into it right now. Now, while Wall Street's earnings season is largely behind us, at least for the large caps, the numbers are looking really, really good. Just get a hold of some of the stats so far. Applying the results through Friday, November 5th, we have third quarter results for 450 out of the 500 members, or 89, or about 90% of the index. Total earnings, aggregate net income for these companies are up 42.9% from the same period a year ago. 18.6% higher revenue, and 80.2% are beating earnings per share. 74.4% beat revenue. The proportion of companies beating both earnings per share and revenue estimates, 62.9%, which is better than Wall Street expected. I've got a few stocks that came out with exceptional numbers, and I believe this will lead into a bigger catalyst for upside moves ahead. Keep in mind, both of these stocks are mature companies that have gained substantially over the time, but sometimes an earnings report can clue us in on what's to come. And right now, we're looking at more upside for two of Wall Street's darlings. So let's get into it right now. First one, Thomson Reuters, ticker symbol TRI. This is a leading provider of value-added information and technology to users in the field of law, tax, accounting, financial services, higher education, reference information, corporate training, assessment, scientific research, and healthcare. Basically, if you need data, you go to Reuters. It's the perfect example of combining technology and financial. And those who follow my work know how much I love companies that combine age-old data with tech. That combo seems to be doing very well these days. 1 year return, 36%, pretty good for a mature company. 4 quarters of better than expected earnings surprises. The company beat both the top line and bottom line with sales of $1.52 billion, 6% higher than previous year and ahead of analyst estimates. In addition, the earnings per share, 46 cents, marked an 18% year over year, coming into 8 cents higher than the consensus estimates as well. Market capitalization, $57 billion. Pretty good, right? A big cap stock. Price target, $140 per share over the next quarter is very possible, especially in light of the fact that fundamentals are heating up, and with the economy continuing to heat up, there's a good chance we'll see more upside ahead for TRI. Next stock on my list, this may be a surprise for some of you, but hold on. MGM Resorts International, ticker symbol MGM. The company's resort offers gaming, hotel, dining, entertainment, retail, other resort amenities. It owns and operates properties all over the place, including Nevada, Mississippi, Michigan, and it has investments in some part of Nevada, Illinois, and Macau. The casino operator generated revenues of $2.71 billion during the quarter. That's $240 million higher than estimates of $2.47 billion revenue in China, jumping 500% year over year to $289 million. That's huge. Domestic operations saw sales climb 180% year over year to $1.41 billion during the quarter. Essentially, the business internationally continues to rebound to pre-pandemic numbers. That's huge. 1 year return, 126% plus. Earnings per share versus previous quarter, 123%. Earnings per share versus previous year, 102% upside. We've seen 2 quarters of back-to-back earnings surprises and positive estimates, and very strong for the stock, and shows that people are starting to live their lives again. And they're not hiding under a rock for this COVID. COVID is beginning to be a thing of the past. We've seen 4 strong buy recommendations, profit target of $60 per share likely over the next quarter, especially if COVID numbers continue to decline. And the rebound we're seeing in the economy continues to gain strength. I hope that helps. Folks, joy of the trade, Jeff Zananeri, he's pulling back the curtain. That's right, on a trading method that's mainly pushes our attention to the stock market right before it closes. That's because from the time the market opens until about 3 p.m. Eastern time, Wall Street, they have the upper hand. But once 3 o'clock rolls around, The big funds on Wall Street, they tend to bleed cash, which sends certain stocks crashing down. Are you ready to take advantage of Wall Street's weakest hour and learn why these massive opportunities exist? Click on the link below for a chance to learn Jeff's revolutionary trading trick. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. Folks, stay ahead of this market. Be the first to be notified when we post our next video.